I'm going to provide to you today my best way of avoiding fake outs. I know a lot of new traders get faked out. I know a lot of new traders experience fake outs. And today I'm going to show you the best way to actually start avoiding these fake outs and ensure more profitability in your trading in the long term. So what we're going to be using is TradingView. Let's say we have a range here. Cool. Let's say we have a range here. See our range right here. Cool. So let's say we have a range right here. So we have these bullish candles going up and then bearish candles starting to print down. Let's say this area of support. This is the area of resistance. And let's say we're stuck in this range. We're just consolidating. So let me make some more. Price doesn't know what it wants to do. It's going up and down. Everyone's seen a consolidating range like this. We hate consolidating ranges. But so let's say we have a range here. Cool. Let's say we have a range here. So we have a area of, where's my mouse? Cool. Let's say we have a range here. Cool. So let's say we have a range here. We're going to be using annotated candles here. Let's say we have a range of resistance, which is in the blue, and an area of support, which is in the red. And let's say price is actually trading within this area of consolidation. It's not deciding where it wants to move. It's just literally bouncing from bullish to bearish, bearish to bullish, bouncing between resistance to support, support to resistance. We've all been in a range like this. I know we all have, and we don't like it. But how can we actually trade and anticipate, okay, if price actually breaks out this range, we're not going to get faked out? Very, very key. There's a couple concepts that you can actually look at. My favorite concept is obviously using a higher time frame bias, which a lot of people, new traders, tend to not use. A lot of experienced traders always use higher time frame bias because they know how to tell a story. But let's say this is for the newer or not the most advanced traders. Price is going within a range, and let's say the previous daily is bearish. So previous daily is bearish, and let's say price currently let's say the previous daily is okay. So let's say the previous daily is bearish. It's previous daily, and let's say price is currently looking like this. Cool. So let's say the previous daily bearish, and price right now is currently looking like this. Okay, so let's say this is a previous daily. Previous daily's bearish. Price is currently looking like this. Okay. So price is just about grabbed the lows, and it's looking like it wants to continue going bearish. Cool. What we're going to be looking for, obviously, is going to be more sells instead of buys, because the higher time frame is telling us that sells are going to be more inclined. However, let's say, cool, price is doing this, and then let's say the previous 4 hour, in fact, like this, steep look wick, which is going to be this daily, current daily bottom wick. And let's say that 4 hours actually moving a bit bullish now. So got a wick. Cool. Let's say this is what price is looking like. Cool. So this is the previous 4 hour, and this is the current 4 hour. Current 4 hour hasn't broken previous 4 hour lows, and it's looking like it actually start wanting to push up. And then we go into the range, and this is what it looks like in the range. This price just consolidating within a range. What a lot of people may be looking for is a breakout of this range, especially that they're seeing that price has tapped into these supports many times for the sells, and it's not breaking past these supports. And these supports around here, this support around here is also the level of the previous daily lows. So the previous daily lows are sat around here. Let's say they're just literally sat just outside. No, my bad. Let's say they're just literally sat just outside here. So you got liquidity sat around here. Cool. Liquidity sat around here. And let's say price is attempting to tap into it. Let's say this is a lower way. Cool. Price is attempting to tap into it, rejected, and starting to push up. A lot of people may insinuate this being, okay, price is rejecting the support, and it's actually looking like it's trying to do multiple types of resistance. Maybe a breakout might occur. What a lot of new traders may look for is to see this, which is, of course, what every trader wants to see. They want to see the easiest move occur, and they see a breakout. They see a breakout, and let's top it off like this. Top off even like this. Let's say price. It's got clean candles to the left hand side. Cool. So 4 hour, daily, 30-minute. This is what the daily looks like. We have a daily bias. 4 hour looks like the 4 hour close bearish, and the current 4 hours actually looking like it's starting to push up, looking like it wants to break these highs around here. Yeah, these highs around here. These highs around here, which are going to be sat around these highs around here. Cool. Let's say price is trying to break these highs around here on the 4 hour, and these highs around here. Let's say these highs around here. Cool. So price is very near to these highs. And of course, what a lot of new traders are going to be looking for is, okay, there's liquidity sat around these areas. Let's try and target it. Price is clearly showing that it's got a breakout. It's attempted to go to sell side. It's rejected many times. It couldn't close below support. Strong support made, and price is breaking out. This is looking like a beautiful trade for a newer trader. No, we're not getting into this because we obviously know that the higher time frame is obviously going against us. This is simply the 4 hour, simply just making its wick. Its top wick, which every candle needs a top wick. 85% of candles have a top and bottom wick. If they don't, then that's seen as an anomaly. So we see price breaking up. So what a lot of traders will try to do is put buys around here, break of these highs, stocks just in the range, attempting to go these highs. They might go break even just on the break of the previous 4 hour high, and they may anticipate, okay, price wants to run, maybe we can target this liquidity on the daily, which is obviously the daily top wick. So they're targeting the high of the daily, which right now price is, remember, we are not even midpoint in the daily right now. And this is what the 4 hour looks like. So we all need to paint a picture of every time frame, okay? Look at what the daily is looking like. As I said, the daily just about broke lows, and now it's starting to retrace up. So it's grabbed sell side liquidity. The 4 hours done a long steep wick. The current 4 hours attempted to grab this liquidity, rejected, and now starting to push up. We've got clean traffic to the side, to the left hand side, which means that price is going to find it easier to actually start running up because there's not going to be any resistances or levels that price may actually want to react at. This is looking like a good setup. The reason why this setup a lot of the time doesn't work is because both biases are going against us. But people are not failing to realize that. They are failing to just see what the 30 minutes doing. The 30 minutes been consolidating, and they think that because when zones consolidating and then finally breaks out, there's going to be a big move to whatever side it breaks out. Yes, that's going to occur, but this is what you're going to likely more see. So let's get rid of this. What you're likely more going to see is actually going to see price calm down. But what you're going to really see is price wick up first. Price is going to wick up, okay, which is going to be this wick here. See why it's wicking up, tapping into these previous 4 hour highs, or just about rejecting these previous 4 hour highs, and then starting to reject. And then what you're going to actually see is price run down. You're going to start seeing some big movements because the liquidity's been grabbed. A lot of buy orders were placed here. A lot of buyers got into the market. Liquidity was actually grabbed. Following the 4 hour and the daily bias, price will then start sinking. Price will then start sinking. Big candles as well. And then it'll start sinking to continue going down. And this is basically what you're going to see here is this move on the 30 minute is simply this 4 hour making a top wick to start dropping down. And I'm going to show you what it looks like in the 4 hour. 1 second. So we got this candle, got a steep wick. Simply what this is this 4 hour. This is what it looked like previously, and then this is what you're going to see the 4 hour then. Driving after grabbing this liquidity. and then making its massive move. I've seen this move occur over 400 times in the market, I promise you. And this is a very good move that you can actually capitalize on if you understand what's happening. This is a move that you're going to see a lot of liquidity grabbed and a big drive, especially at times of volume, in the direction that's matching the higher time frame bias. Remember, the daily was bearish, the 4 hour was bearish, the current 4 hour looked like it was pushing up bullish. After making a move to the sell side, a lot of people are thinking, okay, if price is retracing, rejecting sell side liquidity, let's say it's going to start probably targeting buy side. It might target the key level, which yes, it did. Price targeted these wicks, these highs on the previous 4 hour. It did not break these highs. It tapped into these highs, activating more buyers, and then immediately sunk back into the range and drove down. And a way you can catch this move for me is, I'd say, don't wait on this first candle. Cool. So this first candle here, don't wait on it. What you want to do is when price goes back into the range after creating a new resistance. So after creating a new resistance right here, when price goes back into the range, get into break of these lows. You can even keep stops above here, stops above all these wick rejections, because price is not going to want to grab this liquidity, go back into the range for price to actually start grabbing more liquidity to go back up. Price is in fact going to want to actually break down and go back to the new liquidity around here, which is going to be the sell side liquidity. Okay, so price has already grabbed buy side liquidity. It's grabbed buyers orders. It's grabbed sell stop. So price has already grabbed buy side liquidity. It's grabbed orders, buyers, and now price is pushing down, and the next strongest liquidity area is obviously going to be this areas of supports, the previous daily lows, the previous 4 hour lows, all this sell side liquidity. Price is going to want to drive through it, and then it's going to just keep running. And this is the easiest and most accurate way of how you can avoid fake outs and actually start trading fake outs. Very simple move. What you just simply want to do is just ensure that the daily and the 4 hour is matching your bias.